What's going on, family and friend? This is Htodd for another video. Today video I'm going to talk about some concepts and also how to avoid losing money by selling cover call. The first part for this video I will talk about how to read the number and option. It's very important for beginning to know how they read the option, how to avoid and close early option, and talk about why. It's always talk about why for you can understand what you're doing in the option. The second part for the video I will show you and talk about very important thing, something that a lot of beginner get confusing. Disregard fixing trade that has going a wrong direction. I'm going to talk about different ways saving money from losing trade. I will divide this content in different video in future. It's very common if you buy call option and you buy put option and you down 20% or 30%. Let's go see what you can do to save from that trade. Before we get to the detail, all I ask, hit the bottom and subscribe. It helps my channel to grow and help this video reach out other people here in YouTube. They can learn things like this and that beneficiary for them and think that they should know before they start trading in the market, and hopefully they do not end up losing money investing. Thank you so much for your support. Let's go to the first part. On the screen you go see in Robinhood adjust by 100 share, ticker symbol RCON, Reckon Technology. Just for I can show a live detail about this trade and the move to the expiration day. I put the trade Friday an option called sell cover call. As you see, my average cost is $5.10. Let me show you exactly what I'm talking about. This is a Reckon Technology, RCON. I have 101 share, 54. Market value, that means cost 432. My average cost you see in here, 513. That means I buy this 100 share for 513. Today's return, I'm down for $0.02, and total return, I'm down for $88. Let's go see the option I did for this trade. In here, okay, let's go read the numbers. I put this option sell cover call for $7.50. Now the price for this RCON is $4.22. My average cost, like I say, $5.13. I just showed to you. My strict price is $7.50. If you see RCON, $7.50 call. That being said, if my stock hits $7.50, it will exercise. Not only I get my premium when I put this sell $25, you will see it in here. Average credit 25, 0.25 if you see in the screen in the position. And just want to make sure everybody can read when you put sell cover call what the position. And I'm going to give detail about each one, about amount, equity, break-even, expiration day, current price, and average cost. And also I go hit the correct, not all of them, but just one, the one you can base on. Let's go recap. As you see, my average cost was $5.13. The stock now is $4.22. My strict price is $7.50, like you see in the top. That's being said, if an expiration day, the stock hit the strike price 750, they will exercise my option, and I will not only I get the $25 premium when I put the option, also I will get capital gain, the difference between the strike price 750 and my average cost 513. This is 2.37 times 100 is 237 capital gain. The £7.50 strike price minus my average cost, how much I pay for this stock, 513, is 2.37. Since we have 100 share, is 237. I get two passive income, $25 premium and 237 capital gain. Also exercising my call, they will go sell it. For me, I get my 100 share for the 750 times 100, 750. Let's go in a profit calculator and show you exactly what I'm talking about. Then we come back to this trade and I explain for each one. This is a profit calculation. Very helpful. That tool give you a vision how your option going before expiration day, and you make your own judgment if you want to stay in the trade or not. Basically, if the trade go in different direction, you may save your money by closing the trade, or we have other method that I will demonstrate in a future video. Let's go talk about concepts. As you see in my screen, you go strategy calculator, you go cover call, then we have ticker symbol RCON, current price, but my average purchase price is 513. We go change this one in here, 513. Then I go in here, it's a July, I did my option for July 16. My strike price in here, you see they have 250, 5, 750. I choose 750. But at the time I did, in June 25th, it was 25. That's why you go see different screen from that, because I'm showing you live today, Saturday, but I did it yesterday. The stock was up yesterday and $5 something, but today is down for 422. I just want to clarify that for we don't get no confusion about that. Okay, we did the sell cover call. The price is 431 right now. My purchase price was my average cost 513. I buy 100. I have 100 share. I sell it on July 18. The market right now for this one is 18 cents. Time 100 is $18. This is the premium you go get if you place this option today. But since I placed the option yesterday, I got $25. Today the value for the market is down. If you see in here, estimate return. $18. Maximum risk $4.94 at the price of 0 at expiration day. What this saying, maximum risk $4.94 if the stock down to 0, which basically the stock no go down on 0. like when they say bankruptcy and all this. This is just give you overview and give you prediction. If the stock down to zero, that means going from the market, you will lose all your money. But hopefully this stock not go on zero. Maximum return 255 at the price 750, and break even is 494. In here probably of profit is 100. Since I place it to June 16, you see in here, if we do this in here, 100, 227, and enter cost is 18, 245. Let's go to Robinhood for I can show you exactly what I'm talking about. But because I placed this trade yesterday, I got $25 premium. But the value for this one today is 18 cents. Time 100 is $18. Let's go see this, your position, my position. Amount is -1. -1, that being said, I sell one contract. That's why you see -1. One contract for 100 share. If you see plus, that means you buy call. But since I'm doing sell, it's -1. Equity, -$18. What this, that being said, that the contract now value $18. If you want sell cover call today, you will get premium for $18. Down we go talk about theta first. Theta is -0.014 in the bottom. Let's go remember you about theta that I talked in my last video. We are making money by theta decades. Therefore, each day that passes, we are making more money from setting the shorter theta option. That's why it's very important to know about theta. I go to July 16, which my trade was placed. My theta is 0.0143. We are going to make just $1.43 because I have 100 share. You do 0.0143 times 100 share is $1.43. It's not too much money. That's how you make your own judgment. But since I have 2 weeks to go, I will watch theta and I will watch delta. And I make my own judgment next week by like Friday if I want to close the trade or no. If you want sell the call, if you sell and call, make sure you sell in the shorter date option to increase what theta is. Therefore, we generate the most money every single day. That's why it's very important to know about theta and delta when you place in your option. Also, do not forget about dividends. What I did for dividends, I did explain it last time. Let me show you what I did. Oh, the Nasdaq. No. Give me just a minute for I can upload the Nasdaq.com. Then I did go on Nasdaq.com. Then they told me that dividend history information is presently unavailable for this company. This could indicate that the company has never provided dividend or that dividend is pending. That's why it's very important when you want to buy stock, you need to go to search and you need to make sure that you understand about the company, their financial statement, their dividends, they're moving in the market or not. That's how you go invest your money for, not just going ahead and do what people they invest in. You need to do your own search. Like I said, we're not going to forget about dividend. We go on nasdaq.com and we search and see if they have dividends or no, because we say in previous video that usually the price drop by dividends amount in the ex-dividend day 10%, and the option can exercise early. In this case, we are not going to worry about, because the company no have no dividends. Now let's go back to Robinhood and keep explaining the concept for each number. Now we go average cost. Average credit in here is 0.25. That being said, time 100 is $25. The day when I put this trade, the value for the contract was $25. My premium was $25. That was mine. I can do whatever I want to do with $25. Buy share, buy lunch, buy whatever I want to do. This is my passive income. Soon I put this trade. Now this market, look at this market now, is current price is 0.18. It's down. If you want sell cover call now, you will get just $18 versus when I sell it yesterday on June 25th, I got 25. This is very important to know as a beginner, how to read the number in the trade and how you read and understand the correct. The total return now. Total return is $7, 28%. Total return is 7 for today, and for the week is 28. In this case, it's $7. What this mean? If you want to close this contract now, my premium I got is $25. The market price now is $18. I will get $7 back. I buy back my option. For example, I don't want sell this contract no more, because if the strike price hits and my expiration date July 16, £7.15, they will exercise it and they will sell it. But since I want to keep this stock, I will buy back my option before expiration day to remove the obligation to sell the stock. I will keep my 100 share for Rakon Technology and have $7 profit from it. That's why we need to understand the total return when you place option. This will overview and help you if you want close or stay in this option, or you change your mind. You don't want to sell your 100 share. You want to keep it because you like attach it to this stock. Anyway, if you have any question about the concept that I just talked about, feel free, leave it in the comment section below. Hope you enjoy your video, and I will see you next time.